Hi believers, this is Amit from Waya team, and I'm here to provide a weekly bite and the road ahead in the markets. The Indian stock market experienced significant volatility throughout the week, with major shift in investor sentiments driven by the general election result. The Nifty corrected by over 2000 points from Monday's high as the BJP fell short of majority but recovered those losses by end of the week to post a weekly close at around 23,300 with gains of more than 3% over the previous week's close. The anticipation of stability with the coalition government and the RBI's upward revision of its growth forecast fueled a broad based rally with all the indices and sectors rising back to close to previous highs. Bank Nifty posted gains of 1.7%, while the mid cap and the small cap indices rose by 3% each. The end result of the election brought confidence among the market participants, leading to renewed buying interest. We mentioned in our last couple of bites that FIIs had record short positions, with a long short ratio around 13%. Historically, such a ratio is always seen as short heavy positions, which are then recovered, leading to new highs on the index. This pattern has repeated once again. With such momentum, market should continue the uptrend going forward as all the indicators are in the positive mode. If we see any dip in the coming week, it could probably to form a higher bottom as many market participants who are waiting on the sidelines for the election to conclude will look for buying opportunities. The Nifty Pharma Index has ended with a consolidation breakout and hence selective pharma stocks could also perform well. We like Strides Pharma. Similarly, the auto and the reality indices are looking promising. I personally like Shriram Pistons and I've taken good positions. Since it's small cap, we cannot make a wire call. But if you are listening to this bite, you can consider buying 25% target from here. The overall market breadth is strong and the broader markets could continue the momentum, providing good stock specific trading opportunities in the coming week. Technically, the immediate support for Nifty is placed in the range of 22,700. On the higher side, there is some resistance around 23,400 levels. However, once these levels are crossed, Nifty could head towards 24,000. Coming to the news from Indian economy, the RBI announced its latest monetary policy decision on June 7th, stating that the interest rate will remain unchanged at 6.5%. Annual retail inflation eased slightly to 4.83% in April from 4.85% in March, ensuring a positive outcome of the monetary policy. The RBI also revised upwards the GDP growth projection from the current fiscal year to 7.2% from 7% due to private consumption and a revival of demand in rural areas. A future repo rate cut would serve as a significant boost to home buyer sentiment and enhance affordability, suggesting that rate sensitive sectors like auto and reality should continue to perform well. Globally, US market ended up mixed while European markets closed in the green due to interest rate cuts by the European Central Bank. Let me summarize the bite now. The major event of the Lok Sabha election is over and a stable NDA government is expected. Market volatility has cooled down significantly, which is good news for the bulls who will be comfortable increasing their position. This event has prompted investors to take a closer look at the realities of businesses and their valuation. The earlier perception of zero risk is now gone. We should always focus on valuation in relation to growth. Sectors like power, travel and tourism, capital goods, and real estate continue to look promising, and we expect to identify many good investment worthy stocks in the coming weeks. Thomas Cook is a great ad for next 2 quarters. That's all for today. Wishing you a great trading week ahead. Thank you.